We are back with Harvard Business School professor Bill George, CLSA bank analyst Mike Mayo, and John Szynski of Blackstone is here too. We're talking activism, we're talking the financial industry. John, I want to turn this to you. This country moans about banking fat cats every chance they get. Yet we see very little activist investing or criticism in terms of financials. Why is that?
Activists have lots of industries they like. They have lots of criteria. There has to be a certain amount of transparency, and they have to have some sense of what the end game is. They've never gone after banks rigorously because there's always been a concern of not really having enough information, publicly available information. I think the only area they could start with is governance, but there's always a concern about how to analyze the risk-reward and what the return is going to be in the current banking model.
Michael, what do you say?
I say...
You're smiling like a fat cat.
Oh, yeah. I mean, we will roll out the red carpet for any activist that wants to come into the banking industry. I'm saying we collectively, investors, are starving for activists among some large banks. And we have a plan for almost every one of the largest banks out there in terms of shedding assets, simplifying. Having said that, I do agree partly with what John had to say in terms of the regulatory environment makes it more difficult for activists. But you did have Trian Nelson Peltz in State Street, and that was one of the best performing stocks last year. You did have Dan Loeb for a brief period in Morgan Stanley. You did have Michael Price a couple decades ago, and that led to a lot of the mergers that eventually is JP Morgan today. So you have had activists in the banking industry. I would love to have more activists in the banking industry to get these banks to sell off assets. The investors would like it, the regulators would like it. We just need that extra catalyst.
So I have a different point of view. Completely different.
That's the best banks.
The best banks are very well prepared. They don't need an activist come after them. They're doing their job well. Okay, I can name the banks. Okay,
and that bank,
Wells Fargo, U.S. Bank. Okay, I think J.P. Morgan's had some issues, but they're a very well-run operation. Morgan Stanley's done a total transformation the last few years, and Goldman Sachs. We do all these things all the time. That's what we do.
But these are complex institutions.
There's no doubt they're complex.
And John's
risk
point,
is complex. I
would
agree
they
with John.
be easier targets for activism if regulators, Mike, hadn't allowed these banks to combine and become as large as they are?
Well, I think, each bank has each one of those banks I mentioned has its own model, and it holds together, I think, today very well. It didn't hold together well 5 years ago, but I think those models are holding together very well. And people are moving out of things that don't make any sense. We're looking at returns at every single segment of the business. I can assure you we're doing that. And it's paying off. You can see the disparity now in the top performing banks and the lesser performing banks.
To some degree, they're too big for activists. Too big to fail, too big to manage, too big for activists. Yeah. So when you get to the largest size bank, that's $2 trillion in assets. That's a
How is any activist going to get his head around $2 trillion in assets?
It's not just getting your head around it. It's economies of clout when you're dealing with banks that size.
But do you want America to be able to compete on a global scale? Do you want a General Electric? Do you want a General Motors? Do you want a Google? Do you want people and Apple to compete on a global scale? We want banks. This is a dominant field for America, and we want to have people that compete and serve customers around the globe, not just shrink down to be an American bank. Some banks are like that do a great job, like U.S. Bancorp. But I think we want to be able to compete on a global scale, and that means we're going to have to be large, but we have to manage risk, and we do it every day. I'll tell you, the Fed is doing a heck of a good job today at overseeing risk in the bank.
I was just going to say, maybe Paul Volcker
maybe they weren't 5 years ago. Today,
but we also want those large global banks to return to shareholders. Citigroup stock is at the same level it was in 1993.
Mike, you will not get me to defend them, okay?
All right, John, if not financials, is there an industry that is well-suited for activism?
I think,
bad management.
yeah, look, Stephanie, not a great question. I love you dearly, but not a great question. Every industry, to a certain extent, has candidates that could be better run.
But if we're saying not financials because it's too complex, is there an industry that says this is right for it?
Look, any industry, we can have an activism 101 here. What are the things activists look at? Bad governance, bad management, fat cat SG&A.
That sounds like bank.
But
high, misallocation of capital, misallocation of R&D, business models that are not focused.
No, stop. I don't think it's an industry question. Why not go after the moribund companies? My question is why are the activists going after the best-run companies today? They should go after the ones that are not well-run. They're not doing their homework. Why are they going after the best companies? That's perplexing to me. We got a lot of companies
in some
out
cases,
there that are not
lots
well-run.
of activists, the quieter activists, who do go after the poorly run companies.
Well, then that's fine. Okay, then we should all, on the corporate side, we should get our act together and run well, okay? And we got to perform every day. But I think it's not an industry question. I think we've seen, hey, activists, this is not a panacea, guys. I mean, you remember companies like Sears Roebuck, J.C. Penney. Have you ever heard of those companies?
No,
No, this is not a cure-all.
Well, let's just give you the list now, right then. Invite to activists, come and join us. So when it relates to Citigroup, Citigroup's making progress. I recommend the stock. Let's shed assets even more quickly. J.P. Morgan, spin off your asset management unit. Bank America, sell off the brokerage, liberate Merrill Lynch. Key Corp, sell off branches in different territories. A BNY Mellon, split off your asset management unit. And we can go down the list. And by the way, most of the investors that I talk to agree with me on those points. Activists, come on in. We welcome you to the banking industry.
Mike, thank you very, very much. Mike Mayo of CLSA, and our special guests for the hour, Bill George of the Harvard Business School, board member at ExxonMobil and Goldman Sachs, and John Studzinski of the Blackstone.
I just thinking that. I'm thinking, Mike Mayo, you're wasting your time, brother.
We'll be right
I just went to school. This was such a treat. Thank you.
It's been an amazing hour here on Market Makers with John Studzinski of Blackstone and Bill George of the Harvard Business School. Gentlemen, we have time for a quick final thought. Bill?
Be prepared. To message to boards and CEOs, be prepared, but don't overreact. Remember, you have to run the company for the long term. I like Warren Buffett's statement, run the company for the shareholders are going to stay, not those who are going to leave. So run the company, build for the long term. But the biggest risk to activism is that we overreact and start playing the short-term game and not build for the long term.
Juan?
As a CEO, I tell my clients, wake up and pretend you're an activist yourself. Separate your discussion of your earnings from your vision and give your media more time. In other words, spend more time with the media about your vision for your company, your vision for your industry.
Spend more time on Market Makers with Eric Schatzker and Stephanie Rule. That's John Studzinski's final thought. I'm just kidding.
Why not?
Thank you seriously, what a treat. What a treat for the two of us today, honestly. John Studzinski of the Blackstone Group and Bill George.
Thank you. Thanks, Eric.
Thank you, Bill.
All right, that is going to wrap us up for today. Eric and I will be back tomorrow, but now it is 56 past the hour. It means Bloomberg is taking you on the markets. We're going to send you out to the newsroom with Scarlet Fu.